Good evening, everybody. Welcome to our AAT Revision session. As it mentions there, we are recording this session, so please keep your microphone muted and use the chat box if you need to ask any questions. Okay, tonight's topic, we're going to be talking about disposal of a non-current asset for cash and disposal in part exchange against a replacement asset. Simple example first. Disposal of a non-current asset. Start with a quick question. Disposals account. And the question is, on which side of the disposals account do we enter the accumulated depreciation of the asset? Give you all a minute or two to think about that. Okay. Well, we've got about 50-50 split between debit and credit. Now, here's my tip tonight. We're not really going to talk about how to remember things. We're going to talk about how to work things out. And this is a great example of something that's a lot easier to work out than it is to remember. So let's draw in a couple more accounts and it'll be quite obvious what the correct answer is. And we'll put a couple of numbers in just to make it clearer. So we need equipment cost, accumulated depreciation. And let's say that the cost of the equipment that we're getting rid of is £25,000 and it's been depreciated by 18,000. Now, just looking at those three accounts, if you keep in mind that what we're doing when we dispose of an asset is we're moving it out of cost and into disposals, and the depreciation, we're moving out of depreciation into disposals, it's pretty clear that the equipment cost is going to go here. Accumulated depreciation is going to move to here. So the correct answer is that the accumulated depreciation does indeed go, cost goes to the debit side, the accumulated depreciation goes on the credit side. So let's finish the exercise off. Credit the cost, debit disposals, debit depreciation, and credit disposals. And there we are. That's the exercise completed. It helps, I find, to keep in mind what the job is of each account. The job of the equipment cost account is to keep a record of the cost of the equipment that we still own. So it starts with the balance. When we've disposed of the equipment, we no longer have the equipment, so there should be a zero balance. Likewise, the accumulated depreciation keeps track of the depreciation on the equipment that we own. Once it's been disposed of, no longer do we have a balance in the account. Let's look at how this might appear in a typical, fairly short exam question. Bangor Limited has sold some surplus machinery for £10,000. The machinery originally cost £28,000 in September 2017. You might like to just jot key details down on your pads as we're working through this. Depreciation is at 20% using the straight line method. And it's important to mention at this point, I'm not here tonight to teach you the bones of depreciation. We are revising something that you've already learned. What we're looking at tonight is ways of recalling your knowledge reliably under the pressure of an exam. A full year's depreciation is charged in the year of acquisition and none in the year of disposal. That's typical wording. We usually see that. Once in a while, you might get given a question that says depreciation is calculated on a monthly basis. If it is, well, that's a shame. Thankfully, not very often. A needless complication. You are preparing the accounts for year ending 30th of June 2021. Now, time for, you can ignore VAT. We'll look at VAT later. And a simple question, we're mostly told not to worry about that. The requirement is to calculate the gain or loss on disposal and state whether this will appear in the statement of profit or loss as a debit or as a credit. Now, first job to do in our workings is to work out the depreciation. We bought it in 2017, we bought it in 2021. And there's a very popular wrong answer that lots of people are already thinking of. The only safe way to work out how many years worth of depreciation is charged is to count the year ends. So from September 17, given that it's an end of June year end, our first year end will be 30th of June 2018. The next one will be 2019, and then 2020. That's 3 year ends. We don't count June 2021 because the asset has been disposed of during the year. Therefore, depreciation 28,000 times 20% for each year, 5,600 times 3, 16,800. Be honest, how many people there said 2017, 2021, 4 years? That is an extremely popular error. It's just almost instinctive. You see the 17, the 21, and 4. But if you follow your timeline along, only 3 times do we come to a year end in between. So let's lay out some ledger accounts. Like we did before, I find if you put them one above the other, you can automatically see where the pairs of debit and credit are going to go. It's much, much clearer. We start with our equipment at cost of 28,000, which has been depreciated by 16,800. What are we going to do? We are going to move the equipment down to disposals, move the depreciation down to disposals. We didn't give it away or throw it away, we sold it. That means we're going to receive some money. Where do we put money? In the bank. Now, we've got to work out which side of the disposals account we're going to put the receipts. And again, with most postings, there's an easy side to work out and a difficult side. The easy one for me is if I receive money, put it in the bank. Money in the bank is an asset. To increase an asset, I know, is a debit. Therefore, I'm going to debit the bank. So, debit the bank, which therefore only leaves a credit for the disposals account. So far, so good. Everybody's happy. Final job to do. In our disposals account, plainly there is an imbalance as we look at it. With 28,000 on the debit side, 16,800 plus 10 is 26,800 on the credit side. So the difference between those is either a gain or a loss, which will be reflected in our statement of profit or loss. So we've got to make it balance. We add the £1,200 difference to the low side. If we're going to credit the disposals, that must mean that we debit the statement of profit or loss. And as we all know, anything that's a debit to the statement of profit or loss reduces the profit, is therefore an expense. Anything that's a credit increases the profit and is revenue. Given that the cost of what's gone to disposals outweighs what we got for it and the amount it had been written off by, we have made a loss on disposal. So far, so good. Do flag me up if anybody has got any questions so far. Okay. But you notice how by making pairs of everything, stacking your accounts vertically, it's very clear to see how they all match up. It's very hard to get them wrong. Okay, let's look at now a more complex exam question. This time, Salander Limited is a VAT registered business and has bought a new delivery van for £30,000 plus VAT. This has been paid partly in cash and partly by a part exchange for their old van of £4,000 plus VAT. The old van originally cost £18,000 in March 2018. Depreciation is at 40%, reducing balance. And again, we'll go through the figures for this, but you hopefully should know how this is worked out. So we are revising here. Standard wording again, a full year's depreciation is charged in the year of acquisition, none in the year of disposal. And you're preparing the accounts for the year ending 30th of June 2021. Required, calculate the gain or loss on disposal and state whether this will appear in the statement of profit and loss as a debit or a credit. So, some workings. Since acquisition this time, March 2018, the first year end is June 18 again. So actually, once again, it is 3 year ends, 2018, 2019, 2020, and it's been disposed of during the year 20 to 21. Year 1, 18,000 times 40%, 7,200. Take that off from the cost, that leaves 10,800, 40% of that is 4320. Take it off again, 40%, 2592, add them together. The accumulated depreciation to date is 14,112. Now, before we start building up a set of ledger accounts to reflect what's happened with this transaction, it's often worth summarizing where we need to get to after all the entries, because in an exercise like this, you don't get quite the neat pairs of entries that you might like. There's always a compromise. So if we're given an invoice to work from, great, we can take those figures. But if not, it's worth creating our own. So let's draw up an invoice for this transaction. Invoice number, invoice date, new van, VF21NEW, not the most original, I grant you, £30,000. That is the cost of the new van. Less part exchange RJ18 OLD, oh dear, £4,000, leaves a subtotal of £26,000. VAT on that is £5,200, which leaves a balance payable of £31,200. So we know that however we enter this, we need to finish up with a cost of £30,000 in our cost of vans to represent the new one. We need somehow to make sure that £31,200 goes out of our bank, and our VAT claimable increases by £5,200. As long as we achieve those objectives, then our accounts will be correct. And the chances are, in an exercise, really, however you do the accounts, these are really your workings, because the exam question probably just wants to know what the gain is, what the loss is, what the entry is to the statement of profit or loss. So, workings once again, as what I've just been saying, cost of van will now be 30,000. Our accumulated depreciation will be reduced to zero because it's all been disposed of. We haven't yet depreciated the new van. That's another exercise that we're going to do, or that will be done as part of the year-end process. We're not doing that tonight. The payment out of the bank, the VAT claimable, and again, we need to finish up by working out any gain or loss on disposal. And as long as we finish up with the postings we make having the right effect, we can't really go far wrong. There's more than one correct set of postings that would answer this question. So let's lay out the accounts. We start with the van, the old van with a cost of £18,000. Remember, the job of the vans at cost account is to keep track of the cost of our assets, not what they're worth, but what they cost. We have accumulated depreciation of 14,112. We're going to need a disposals account. We're going to need a bank account because we've had to pay for it. We're going to need a VAT account. Let's transfer the figures in, take the cost out of the van, move it into disposals, take the depreciation out of depreciation, move it into disposals. Let's now take the money out of the bank, 26,000. Now, I've chosen to split the bank into two postings because I can make a pair of postings against van cost and a pair of postings with VAT. Other people will simply show 31,200 coming out of the bank. They may show VAT. I've seen it answered before where VAT is shown as a 6,000 claim against the new van and an 800 liability against the part exchange, because when we part exchange an asset, we do have to pay VAT on the proceeds. I've chosen to do it this way. Next one, we've got the 4,000 that we have received in respect of the part exchange, and that also makes up the rest of the cost. So one way or another, we've finished up with 30,000 in van cost, which is the cost of the van that we now own. It just remains now to identify what is the effect on profit or loss? Well, if we look at the disposals account, this time the credit side is greater than the debit side. We don't need to balance off fully to see that the difference is £112. Debit disposal, therefore the entry to statement of profit or loss has to be a credit. And in this case, we can therefore say we have made a gain of £112. This will be shown as a credit to the statement of profit or loss. If you lay your accounts out like this, work a pair of entries at a time, it's easier to get it right than it is to get it wrong. But don't try and remember things. If there's one thing, I have a motto: don't sort of try and remember stuff. Learn how to work stuff out, and it'll never let you down. Okay, final thoughts. It's the balances at the end that really matter, because ultimately, however we get to the correct answer that we've made a gain and it's a credit, that's what matters. Next thought is, as I've said, you'll see the VAT, I've seen it done many times, as two separate entries, which net off to 5,200. The bank, I've seen different ways. Yeah, the bank has 30,000 and 30,000. The part exchange almost as a refund paid in. I don't like that, because you haven't got a 4,000 entry or whatever in your bank account. It's nicer to stick to figures that you can marry up to what's actually on your bank statement. And 26,000 and 5,200 are easier to marry up to 31,200 than payments both ways. Whichever way you do it, it's never quite going to be perfectly neat. You've got to compromise somewhere. So finally, does anybody have any questions on that? If not, we will be emailing out this recording. So it just remains for me to say thank you very much for attending, and I hope you found the session useful, and I hope you pass your exam. Thank you very much, and good night.